Hey guys, this is Alan Moore, certified financial planner and founder of Serenity Financial Consulting. Thanks for joining me. So interest rates are low, the economy is sluggish. There's a lot of homeowners out there that are underwater on their homes and would like to get out of them because they need to move for a new job or they just want to change locations. So I'm getting a lot of questions about investing in real estate. It can be an option in terms of getting some additional returns that you can't get in a money market account, as well as a way to possibly rent out your home to avoid having to sell it at a loss right now with housing prices being low. So I actually bought my first investment property at 23 years old, and fortunately it was a successful endeavor. But real estate is a really good way to make money. It's also a really good way for investors to lose their shirts. So here are just a few tips that I kind of learned through the process of owning some investment properties, and hopefully you can learn a little bit from them as you're considering possibly becoming a landlord. The first thing is that it takes a lot of time. Being a landlord is not a 9 to 5. I mean, really, have you ever had a pipe burst at a convenient time in the day? No, you're going to be there at 2 a.m. trying to fix things. If you're not very handy, then you're going to be having to bring somebody else in at really inconvenient times, which can get expensive. There's some big time sucks, such as lawn maintenance, snow removal, just general maintenance, chasing down renters for their rent checks every month. All of these things tend to add up, and it can take a lot of time to manage the property. So just be aware of that. The second thing is be able to carry the mortgage without a renter. Now this is huge, and I don't want you to think that you're never going to get a renter, but if you can't afford the mortgage without a renter in your property, worst case scenario, do not even consider purchasing a property or renting out your home. It is a bad idea. You're not going to hold on to an investment property that you can't rent out. But you need to be prepared financially to handle worst case scenario, because you never know what could happen that could keep people out of your home. And there's a lot of different things that could affect that, your ability to rent it out. The third thing is be realistic about your income. Ideally, your principal, interest payments, and insurance, your PMI, should not exceed more than 50% of your gross revenue. So if you're bringing in $2,000 a month, you want your payments and all of your fixed costs to be $1,000 or less in order to be able to profit, because you need that other 50% for maintenance, upkeep. You need to be able to build up a rainy day fund for when you need to replace the roof or something happens, you need to paint, siding, all those types of things. Be realistic. And so if your property cannot command a high enough rent to be double your PMI, I would carefully consider either not purchasing the property if you don't own it already, or if you do, try and find a way to raise your rents or maybe rethink other options. The next thing is to be picky about your renters. Okay, this is a big one, and I am not promoting illegal discrimination or anything like that. But I am saying that you need to be choosy about who you let live in a property that you own. You can help. The best way to avoid an eviction is to have good tenants in the first place. Call their references. Verify their income is at least 4 times the rent. You do not want somebody who makes $2,000 and the rent is $1,000. It's too tight. Don't allow that to happen, because you're going to be the one that loses out if something happens to their income, and that's a pretty tight margin. The other thing is, and I mean it, take a security deposit, 1 month's rent. Be sure they can pay the first month's rent up front, because if they're able to afford that up front, then chances are they have a little bit better financial stability maybe than somebody that can't afford that. So definitely, be choosy about your renters. And the final thing, do not allow pets ever, under any circumstance. And I am a pet lover, a pet owner. My cat would be furious at me for saying all of this. Do not allow pets in your property. Even if they're cute and adorable and they're so well behaved, it just doesn't work. It will cost you a bundle. You're going to have to replace the carpet every time a tenant with an animal moves out, unless you own a dump. If you have a quality property, you cannot get the smell and the damage that a animal does to your carpet out. It just doesn't work. And you would be surprised at how fast a dog or a cat can eat through a security deposit's worth of baseboards and carpet. It only takes an hour with a new puppy to lose thousands of dollars in baseboards and carpets. So I highly encourage you not to allow pets. What about outdoor pets? Do you really think in the middle of winter your tenant's going to look out and see their dog covered in snow and not let them inside the house? I don't think so. So outdoor pets become indoor pets. I actually refused to fence in the backyard of my investment property to avoid the outside pet discussion because it's just not one you want to have. So again, rental property, becoming a landlord can be a really great way to make money, to increase your income, to create some passive income. So down the line, you own a home that's basically being paid for by renters. But on the other hand, you really can lose your shirt. So you want to be careful. You want to be cautious going into it. If you've never owned an investment property before, find somebody who is experienced in real estate ownership and being a landlord that can help kind of guide you through the pitfalls of being a landlord, and that'll be a huge help for you. So what do you think? Have you ever considered being a landlord? Are you currently a landlord and want to share some additional tips? Definitely feel free to share in the comment section. So that's all I have for today. Thanks so much for joining me.